Hello, everyone. Good morning to you, good afternoon, good evening, depending on whichever part of the world you are tuning in from. Well, I'm very glad to welcome you to yet another promising edition of the Forex Morning Mastery with Sheriff Daramola. It has been a very interesting 24 hours so far, as a lot of fundamental factors are beginning to develop in the market, and in turn, it has been affecting the current market structure, as we shall be looking at in a couple of moments from now. And well, since the beginning of the week, it is very obvious that the US dollar has been dominant throughout the course of the week, as the value of the dollar continued to rise as everyone started moving their capital from most of the safe havens into the US dollar. Then the oil prices too surged yesterday with about 3.1 or 2%, as the US crude stockpiles dropped once again for the second consecutive week, which also has led into some significant movement in price action on the US oil spot. And of course, we were able to take scoop quite a lot of profit on all of these assets, and we are going to be looking at that in a moment. So in anticipation of today's trading session, I have conducted a comprehensive technical analysis on all of the assets on our watch list as we prepare and to take another fresh new look at the financial market. So since the beginning of the week, we have been looking at three major assets, which includes the US oil spot, the XAU USD, popularly known as the gold spot, and of course the USD JPY. And on all of these assets, we have done pretty well, as we scooped in a significant amount of profit on all of these assets. So before we go into the details here, I will first of all like to welcome the newcomers in the house. For those who are joining us for the first time, you are highly welcome on board and glad to have you around. Well, what we simply do here as technical traders, we gather here as a community in anticipation of both the London and the New York session, where we look out for structures and patterns that will help us guide our trading decisions for the day's trading session. So you are highly welcome on board, and in fact, I encourage you to stay tuned in throughout the course of the session so you don't miss out on these insightful ideas we shall be deliberating on today, and in fact be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, you are highly welcome on board. Now, with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to run through the economic calendar so that we can keep tabs with what majority in the market are looking forward to guide their trading decisions for today. And of course, for those who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can make us position ourselves in such a way that we can capitalize on that move prior, during, and even after the event. So on the economic calendar for today, 28, I would like to readjust this. 28 of September, that's Thursday. We do have a couple of high impact events coming in from both the United States and the Japanese economy. And of course, the anticipation of this event itself has a major influence in inciting price movement. Now, the first high impact event we are going to be looking at today is going to be the gross domestic product annualized for quarter two. Now, for those who don't know what the gross product is, This is a very significant index that provides insight into the overall health of the US economy. And as a result of this, the data whatsoever it comes out with has an impacts the investor sentiment, in fact trader sentiment, influencing the trading decisions too. Now, from the data we have here, and generally speaking, a high reading is considered as positive, while a low reading is considered as negative. Now, if we look at the data we have here, the previous data came in at 2.1%, and presently economists are projecting another 2.1% growth or expansion for the US economy for this time around. So it really shows us that the US economy is quite resilient at this point in time. And in fact, if you look at what happened yesterday, the durable good order 2 came in beyond expectation, giving us an insight into how strong the US economy is at this particular point in time. So we are going to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or beyond expectations? So this is coming up in about 5 to 6 hours from now, so we do want to be anticipating that event. Then we also have the Fed's Chair Powell speech, which is coming up much more later in the day, and that's about 12 to 13 hours from now. And we all know how important this is, as the first chairman's speech holds considerable influence over financial market, and his remarks provides us insight into the central bank's outlook on the economy, potential policy shifts, and of course interest rate changes, hereby impacting in our decisions and of course the market sentiment. So this is also a major event we are going to be looking forward to. Then we also have a couple of more data coming in from the Japanese economy later in the day, in about 16 hours to 17 hours from now, and that is the consumer price index, which is an inflationary measure, let me put it like that, as it gives us an insight into the inflation of the Japanese economy. And we all know how the Japanese economy has been trying to fight the inflation in the country, which is not an aggressive method actually, as they are adopting the ultra loose monetary policy, which at this point in time is really not favoring the USD JPY. And as a result of this, since we are monitoring the USD JPY, the resilient US economy is outshining this asset, and this begs for some intervention from the Bank of Japan. So at this point in time, everyone is looking forward to a potential intervention today. We are going to see what will happen today. If there's going to be some insight into this possibility, then we might like to see some crash going on there. So with the information we have gathered here from the economic calendar, all we are going to be doing right now as technical traders is to dive right into the current market structures to look at things from a technical standpoint. Let's look out for patterns, let's look out for structures that will help us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. Now, on the moving right into the chart, the first asset we are going to be looking at this morning is going to be, okay, I already have it on the chart, is going to be the US All Spot. And on the US All Spot, in the last 1 week, in the last 4 days right now, we have a significant movement in price action in the bullish direction. As you will see here, we have over 1, 2, 3, 4, 5, 6, 7 positions running at this point in time with over 1,200 pips, I guess. Let me see, I think I did the I want to check this out. So I did some updates yesterday night before I went to bed. I hope you all saw it and how we intend to capitalize on more trading opportunities on this one. So on this one, we have over 1,500 pips running in profit on the US All Spot. Now, before we go into the details of what our expectation is going to be looking like today on the US All Spot, I would like us to run through how the week started and what led into the into the decisions we made so far this week. Remember, at the beginning of the week, we were selling the US on spot before we begin to see a change in momentum before the midweek. And now let's look at the structure closely. Now, at the beginning of the week, I will zoom this out a little further so that we can see things clearly here. So at the beginning of this week, we had the scenario here where price action was confined within the $90.10 level and the $89.60 level to give us an insight into the level of indecision at that particular point in time. And you all know how we do it in this community when price action falls into such range, giving us an insight into the uncertainty. We have no other choice than to exercise patience, waiting for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And in fact, we had the breakdown and multiple retests to further confirm the strength of the sellers at the beginning of the week, which later turned out to be a retracement of the impulsive move from last week. Though we rode the move all the way to the downside, we had a couple of more entries that we added. Remember, we had levels like the $89.30 area, which we used to maximize the potential of the bearish move. We also added one more position at the breakdown of the $88.95 and of course the $88.50 area, giving us roughly over 100 pips at least on the first trading day of the week, which is not bad at all. And on Tuesday, we begin to see the bullish traction, of course, and we identified a descending trend line after connecting the series of lower highs here, which later played a major role in guiding our bullish expectation in this market, as we saw price action did a final breakout of that trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate this bullish attempt. And in fact, we saw the breakout retest of the $88.95 level, triggering our first buy position for the week, and we went on to add more positions at the breakout of levels such as the $89.30 level, $89.60, the $90 area, which happens to be our key level for the week. We also added one more at the $90.80, and of course the $91.50 level, all of which gave us significant amount of profit. And then finally, during the early hours of today, for those who are with me on my Telegram platform, I did updated another level at the $93 area where we were expecting to add another buy stop order so that we can capitalize on more buying opportunities at that particular point in time. And for those who took advantage of these opportunities, well done to you for being on standby to capitalize on this current buy position we are in right now. Now, the next thing we are going to be doing, as usual, for those who have been with me in this community for a while, the next thing we want to be doing is to move our stop losses accordingly and secure this current buy position. As of course, we don't want to get caught up in a situation where a crash could come and then take us out of our position or even reverse us into a losing position. So at this point in time, I will be suggesting that anywhere around around the $93 area, that is between this area and the $92.75 level, seems most appropriate to move all stop losses to, and let's see how the market will react. And remember that we do want to be giving enough room for price action to breathe. We might likely see some retracement at some point in time, that before another wave of bullish momentum happens here. So with a well secured position, what is going to be our plans for today? What is our intentions as we continue to monitor price action? Well, personally, this morning while I was trying to look at the current structure, you can see here that we had the barrier around the $93.50 level. As you will see that throughout the early hours of today, buyers have been struggling to break out of this area, giving us a resistant line to work with for today. Now, for me to buy the US all spot today, I would want to see another breakout of that area, taking out all the sell positions within that zone to give me another confirmation that buyers will likely be inciting more pressure to break to continue to the upside. So there are two ways to which we can capitalize on this. For those who have been with me in this community, you know how we do it. For those who are profitable so far this week, that is, if you have been part of this profitable journey, you have joined us since Monday, buying and adding more position, definitely you are in profit right now, so you can afford to risk or leverage on the profit we have made so far this week to test waters around or above the $93.50 level. And in fact, if it doesn't work, then we know that we are just we are not affecting our portfolio, as we are only risking some of the profits we had made so far this week. However, if you are joining us for the first time, then it is very important that we wait for confirmations before we jump into that position. And to give a visual representation of what I'm talking about here, we want to see price break out of the $93.50 level. That is, if you are joining us for the first time, retest of structure on our lower time frame. So if the breakout happens, what we want to be doing immediately is to scale down into the 15, 10, or 5 minutes time frame, where we shall be looking out for retest of structures or signs that sellers are finding it difficult to break down and maintain a bearish pressure in the market. Then at this point, we want to be getting ready to buy. And of course, this would reflect on the chart as a retest of structure, continue buying pressure around this area, then we can open another position or open a new position if you are joining us for the first time. So on the US all spot for today, I will still maintain a bullish bias with the hopes that I will capitalize and maximize this move all the way to wherever it's going to go. Now, in as much as we're looking out for buying opportunities here, as technical traders, we cannot ignore the potentials that sellers might likely come in. And if you have been with us in this community for a while, you know how we also want to be taking into consideration the potentials of sellers too. Now, if you look at the structure, this is a phenomenal height we are in right now in the US all spot market, as price has never been at this level since the beginning of this year. And most of the time when price finds a new high, it takes quite a while before market participants acclimatize with that zone. So at this point in time, there will still be this level of fear cast over the market at this point in time, as majority will be thinking that, for instance, for those who had been buying at a very cheap price, when it gets to a phenomenal height like this, they will start thinking or considering closing some of their positions to take some profit, especially as we head towards the weekend. Now, as a result of this psychological expectation, we are likely going to be seeing some choppy situations, retracement phases, consolidation phases, or profit-taking activities that will reflect on the chart as price running through probably to the downside. Now, as a result of these expectations, we might likely be seeing some selling pressure. And if that happens, what is it that we want to see here that will make us consider selling? But for me personally, I will say here that even if I have a sell signal at this juncture, I will not be taking it, as it will still be a retracement of that impulsive move we have been enjoying since the beginning of the week. However, if you are a counter trend trader, a scalper, well, you can afford to take advantage of such opportunities. So let's look at what we to look out for here to help us capitalize on that move. Now, first of all, I want to acknowledge this trend line that we identified yesterday after connecting the series of higher lows since Tuesday's trading session, as you will see right here. And of course, if sellers come in at this point in time, it is likely going to be dropping to as far as this trend line in anticipation of another wave of bullish momentum. Now, for scalpers and counter trend traders, we might be looking at a breakdown retest of the $93 area back into this trend line, or the $91.50 level, hereby dovetailing to a minimum of 80 pips and a maximum of about 150 pips on this one, where depending on how price action now reacts with this zone or level will determine if we are going to be adding more sell position or getting ready to buy. So what I'm actually expecting based on technical expectation is that if price comes into either the trend line here, we might likely see some buy pressure resume to inside an uptrend scenario. And in fact, if it breaks down that structure, then I will be looking at the $91.50 area, where the resumption of buy pressure here will be a beautiful opportunity to join the uptrend scenario. However, if price action goes all the way to break down, retest that ascending trend line, then we continue selling pressure where we see signs that buyers are finding it difficult to climb back above that trend line. Then I want to be getting ready for a crash. Then if that happens, we have a sell position, have more sell stop order below the $91.50 level to maximize the potential of that bearish move. So this is how we are going to be managing our positions on the US All Spot this morning. And our center of focus for today is simply between the $93.50 level and the $93 area, where depending on where price breaks out of will determine what our next line of action will be. So you do want to be marking out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. But I still hold strongly the bullish bias here. But if price does the opposite and begins to run down, breaking down that ascending trend line, then I would have no other choice than to get prepared for some momentum shift at this point. So these are my views here on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, and then if there are none, we'll move on to the next asset. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So in that regard, I will be moving on to the next financial asset on our watch list. All right, thank you very much, Eric Mudavadi. Thank you very much. Okay, thank you very much. I hope you can hear me now. Sorry about that. So I have to go over this again. So like I was saying earlier, I was saying that I needed to share with you how the week started for us here in this community as an educational tool, and at the same time, for those who are not part of our live session, you can have a background knowledge of what led to the idea of selling this asset. And in fact, on the XAUSD this week, I will consider the XAUSD as the most profitable asset amongst our assets on our watch list, where we have been able to scoop in over 1,800 pips from multiple entries, as much as 6 positions running in profit right now. So I wanted to share with you what led to the idea of selling and what made us to feel comfortable doing that. So at the beginning of the week, we noticed our price action was initially confined within the $1,926.50 level and the $1,922.75 area, giving us an insight into the level of uncertainty in the market at that point in time. And of course, you know how we do it. Whenever we have a range like this, we want to wait patiently for price to either break out of the resistance line to give us an opportunity to buy, and or break down the support line to give us an opportunity to sell. Now we saw what happened here. We saw that most of the first during the first day of the week, it was more of an attempt to break down the support line here, as you will see, compared to trying to break out of the resistant line. As every point in time, we've been seeing sharp rejection of the resistant line, further emphasizing the strength of the sellers at that point. Then we saw the breakout of that structure to trigger our first sell position, as we saw this huge engulfing candle slicing through that support line of that range. And for the fact that price remained below our key level at 1,925, this further emphasized this further confirmed that we want to be going bearish on this one. Now we rode the move all the way to the downside, adding more positions, had the breakdown of structures such as the 1,915. As you will see here, we projected all these levels at every session we had this week. We had the 1,913, we projected that too. We also projected the 1,910 as we continue to add more sell positions. We had the 1,900. That was, in fact, that's huge support line we identified on the higher time frame. For those who have not watched my XAUSD video, you might want to watch that video so you can understand how important the 1,900 is. And for the fact that we had the breakdown retest of the 1,900, it was a sign that the dollar is very, very strong at this particular point in time. Now we saw price continue to ride all the way to the downside. We also projected this level here at the 1,895 during our live session yesterday. Remember, we projected this one too, and we said we are going to continue to sell at this point in time. And during the later part of yesterday, I did an update on the XAUSD where I also added another new level at the $1,874.50 level, where I said a breakdown retest of that structure will also be welcoming more position on this one. So congratulations to everyone who has been part of this profitable journey. Now at this point in time, you know how we do it in this community. As soon as price has moved significantly well in our favor, the next thing we want to be doing is to move our stop losses and secure the current position. And I do hope that you have done that appropriately, because I mentioned in my commentary yesterday, for those who are with me on my TradingView and Telegram platform, I made mention that we should be moving our stop losses and securing the current sell position. And if you have done that, kudos to you. And if you haven't, it's high time you did that now. And anywhere above the 1,878 seems most appropriate to move all stop losses to. Remember that we do want to be giving enough room for price action to breathe. In that regard, we might likely be seeing some retracement back up a little before price continue the downtrend. Now remember that we are looking forward to some major impactful event coming in from the United States today. That is the GDP data. which of course will give us an insight into how much the US economy has expanded, and there is this consensus projection of a 2.1% expansion, just like it did last month. So we are going to be looking forward to that one. And then we are also going to be looking forward to the Fed's chairman's speech, which is coming up much more later today. And we all know that this anticipation itself affects the market. And I think we're beginning to see the anticipation right here on the chart. Now, let's look at what has been going on here in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So in the last 14 hours, you will see here that since price tested the 1,874 zone, we have noticed a consolidation phase, which gives us an insight into some level of uncertainty at this point in time. And this could be as a result of the anticipation of this event coming up today, as major participants in the market are stepping aside, hereby giving us low liquidity in the market, waiting for cues from these economic features coming up today. And as a result of this, we have a confinement of price movement between the 1,878 and the 1,874 area. Now, you know how we do it whenever we have such range. We want to exercise patience at this juncture, waiting for a signal, either in the form of a breakout of the resistance line or the breakdown of the support line for trading opportunities. Now, I would like to adjust the 1,874.50 to 1,874 area, as this gives us a true picture of the support line of this range. Now, with the situation we have here with a precise trading range at this point in time, what we are going to be doing is to exercise patience. And in fact, this whole scenario here could transition into a downtrend continuation pattern in the form of a bearish rectangle, as it might likely be like this. So we might likely have a bearish rectangle like this, where the breakdown retest of the support line at the 1,874 is another opportunity for us to add more sell position to our existing trade. So basically speaking, this is where our center of focus is going to be today, between the 1,878 and the 1,874. Whatever happens here, where whatever direction the breakout or breakdown is, will likely give us an insight into where price will be closing for this week. So personally, I want to be looking forward to more selling opportunities here, considering the fact that we have a strong bearish momentum this week. And there are two ways to which you can capitalize on this one. For those who have been profitable so far this week, for those who have been part of this profitable journey with us, you can just afford to have your sell stop order below the 1,874. Let's see how far this will go. We've been so profitable that we can afford to leverage on some of the profit we have made so far this week to test the waters around that area, and ensure that you have your stop losses in place anywhere above the 1,878, which is about 40 pips thereabout, to secure this position. Now, for those who are joining us for the first time, that is, if you are coming into this market from a clean slate, then we want to be waiting for confirmations before we jump into the position. And what we're going to be looking out for is the breakdown first of all. That is, if you're new with us, then you scale down to the lower time frame to wait for confirmations like a retest of structure before jumping into that position. So this is how we are going to be selling the XAU USD today. And in fact, I'm leaning more towards the bearish expectations here, considering the resilient US economy at this point in time. And there are comments from the Fed Reserve last week citing that the Fed is going to be increasing interest rate again during the next month, which is of course a positive news for investors placing their bet on the US dollar. Now, in as much as we're looking out for selling opportunities, there are chances that buyers could also come in at this point in time. The market is a very dynamic environment, and we also want to be as flexible as possible. Now, it now depends on you if you do want to be part of this bullish momentum if it happens. Personally, I would rather want to see this bullish expectation as a retracement of the impulsive move we have been witnessing so far this week. But if you are a counter trend trader and you feel comfortable scalping, then it could be an opportunity to capitalize on that. Now, if we are going to be considering buying at all from this juncture here, since we have a range, then a breakout retest of the resistant line of that range is what we will be looking out for to place a buy position here. Like I said earlier, I'm not going to be part of this move, but if you're a scalper or a counter trend trader, you might want to be looking at the breakout retest of the 1,878 to join that uptrend scenario. Now, joining this move requires a lot of alertness, because you do want to be moving your stop losses accordingly, because you are trading against the trend. So you do want to be on standby to move your stop losses accordingly to secure your position against any sudden pullback that might happen. So we are going to be, if price breaks out the 1,878, I see Sharif's comments here saying that there is no audio. Please help me confirm if truly there is no audio there, so I can do the necessary adjustment. From what I have here, my monitoring device says indicates sounds, but I don't know. Please let me know in the comment section if there are no sounds so that I can do the necessary adjustment. So thank you, Sharif, for the update. So if we are going to be buying here, we need to be very, very careful. Be on standby to move your stop losses accordingly, as you will be trading against the trend, and it's very likely that we could see a sudden pullback that could come in to take you out of that position. So counter trend traders, scalpers, if you are going to be buying above the 1,878, be very mindful, be on standby to protect your positions, move your stop losses accordingly. So this is my view here today. Our center of focus is between the 1,878 and the 1,874 for today, and I told you how much I'm leaning towards a further breakdown of the 1,874, and if price breaks out of the 1,878, then we consider this as a counter trend opportunities. And if you're a scalper, a counter trend trader, you want to be taking advantage of that one. All right, thank you very much, Juliet Kirema. Thank you for that confirmation. I'm glad that the audio is there, and good morning to you. Glad to have you around with us this morning. So these are my views here on the XAU USD. If you do have any questions or you need me to do a clarification whatsoever it is, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds to see if there are any questions before we move right into the next and last financial asset on our watch list for this week. Okay, I see your comment, Sheriff. All right, thank you very much, Sheriff. I'm glad that everything is fine. Okay. In the absence of no questions, I want to assume that we are all on the same page here. So let me just move right into the next financial asset on our watch list. So the next asset on our watch list is the USD JPY, and on the USD JPY we've done pretty well this week as we scooped in a significant amount of profit here. Let's look at how many pips we have. Personally, I'm already out of the trade on the US JPY as price action hit my stop loss after moving my stop loss to around the 149.400 area. So if you still have a sell position, a buy position running at this point in time, that is, if you still have a position running, you do want to be moving your stop losses right now. So I want to see how many pips we have running on this one right now. So the first position is running with about 100 pips. The second position is running with about 50 pips. That's about 140. And the third position is running with about 24 pips. So we have close to about 200 pips at this point in time on the USD JPY. And remember how crucial this juncture is in this market, as we all know that majority in the last couple of months there has been this fear cast over this market as regards to a potential intervention from the back of Japan, and every week we have signs that there will be an intervention, but along the line these signs dissipate over time, hereby giving buyers more confidence to place more positions on the US dollar. And as a result of this, we have seen a strong bullish momentum in the USD JPY. Now on the USD JPY, at the beginning of the week, it was a very simple setup we saw here, where initially price was confined within our key level situated at the 148.500 and the 148.260. And of course, what we agreed here on Monday is that we are going to be waiting for either the breakdown of the support line to sell or the breakout of the resistance line to buy this asset. And there was no point in time when price broke down the support line. Instead, we saw the breakout of the resistance line at the 148.500, which triggered our first buy position, and since that moment we have been buying that asset. Then we also acknowledge multiple levels like the 148.930, which gave us an opportunity to add more position. We also had another level at the 149.150. This was yesterday, where we also said we will be adding more position on this one. And during the end of yesterday's trading session, I did an update on the USD JPY where I said another breakout retest of the 149.650 will be welcoming more buy positions, but this never happened in this market. And once again, congratulations to everyone who has been part of this profitable journey. Now, moving on right now, what is going to be our plans for today? Are we likely going to be seeing an uptrend continuation, or are there chances that sellers could come in at any point in time to take over this market? Well, to guide our trading decisions for today, we have a simple parameter we are going to be using here, and that is our trend lines. Now, if we go to as far back as Monday's trading session, I think a couple of hours into the New York session, we saw our price, after breaking out of the 148.800 zone, we saw how it consistently found higher lows in this market, which further gave us the confidence that buyers are gradually gaining momentum, and of course we do want to be capitalizing on that. And as a result of this, we connected a series of higher lows, giving us this trend lines. In fact, I have a couple of them here which has been supporting this bullish momentum since the beginning of the week. Now, you know how we use our ascending trend lines in this community. As long as price remains above our ascending trend line, we shall feel comfortable with our bullish buyers and also look out for more opportunities to buy this asset. Now, with the way things are going right now, despite the strong selling pressure we observed since the early hours of today, the momentum in this market is still screaming bullish. And in fact, I want to consider that bearish momentum we're noticing since the early hours of today to be more of a retracement phase. Now, the question here is, how far will this retracement phase go before another wave of bullish momentum will happen? Now, we have multiple levels here which we can use. We have structures here which we can use to guide our decisions here, and one of them is the 149.150, which is the level that was broken during yesterday's trading session. Remember, this level was initially a selling niche at some point in time at the beginning of the week before it was finally broken during yesterday's trading session. And from a technical standpoint, there are chances that price, after breaking out of a structure such as this one here, price coming back to retest the structure whereby pressure will incite another wave of bullish momentum. Now, in addition to that level at the 149.150 is the ascending trend line, which interestingly shares a beautiful confluence with that 149.150. Now, with this scenario here, we have a sweet spot to look out for more buying opportunities if price drops as far to that level. So if price gets that far, then we want to be looking out for patterns and structures around this area that will help us to guide our trading decisions. So at this point in time, I will be suggesting that we exercise patience. Let's see how far will this bearish momentum go. If it gets into that area, then we will be looking out for patterns. It could be a double bottom structure, head and shoulder pattern, but for the USD JPY, it's always more of a double bottom structure that will incite and a signal that we want to be getting ready to buy this asset around this area. Now, in as much as we're looking out for buying opportunity around that area and considering the importance of that confluence, what happens if we notice the breakdown of the structure? Well, the breakdown of the structure could incite a momentum shift, and if you look at it well, you will see that if a breakdown of the structure happened, the breakdown of the ascending trend line will have also happened, giving us a sign that the trend line may no longer have the capacity to continue to negate that bearish attempt. And if this happens, retest of structure will be confirming the sellers are gradually gaining momentum, and this could be a sign that majority are beginning to think that the Bank of Japan is likely going to be inciting an intervention. And in fact, the narrative in the Japanese news yesterday was more of citizens clamoring for an intervention. So if the Bank of Japan yields on that one, we might likely be seeing a crash. So we also want to be taking all this into consideration. So if we are going to be selling the USD JPY, I would rather want to see a breakdown retest of both the 149.150 and that ascending trend line to start considering selling the USD JPY. Now, I still hold on to a bullish bias here unless price breaks down the structure. Now, if price does not get to this area, what happens? What do we want to be doing here if price does not get into the zone? Well, if price does not get into the 149.150 and instead it continues to climb and find higher highs, then a breakout of the 149.650 will be all we need to confirm that we want to be adding more buy positions here. However, there are chances that we could take advantage of a buy position even before the breakout of the 149.650 happen. We could have a situation where buy pressure could resume around this area, not even getting into the structure before it goes on to break out of that structure. Now, for us to capitalize on that one, how do we intend to do that? Now, I think I have a level here at the 149.450, which we can use to guide that decision. So I want to be labeling this one right here, and of course you do want to be doing that as well, as this will be serving as a reference point to guide an uptrend scenario. So we have the 149.450, and the reason why I have identified this level I will share with you in a moment. Look at what has been happening here in the past. That was yesterday. We saw buy pressure here. We saw buy pressure around this area, in fact multiple times, giving us a sign that this area has been a strong buying niche at some point in time before the breakdown happened during the Asian session today. Now, with the situation here, we can see that since the Asian session, sellers have continued to push price to the downside around this area. But if the London session begins, or the New York session begins, and we see price climb back above this area, then we want to start considering buying. Now, remember, we are not jumping into a buy position at this juncture, as we will need some confirmations like retest of structure, signs that sellers are finding it difficult to break down the 149.450. Then we can be part of the uptrend, while the breakout of the 149.650 will welcome more buy position. So this is how we are going to be managing our positions on the USD JPY, and it appears the sell pressure is approaching that 149.150 and the ascending trend line. So let's see how this will play out in the next couple of hours, and if you follow through with my explanation here and allow structures to mature, we will definitely be part of that next move that will be happening today. And also remember that we have the CPI data coming in from the Japanese economy much more later today, which also has a tendency of influencing volatility in this market. So let's be on standby to capitalize on this move. This is my view here on the USD JPY for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we call it a day here today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. It has been a wonderful moment with you guys. I saw your comment, Juliet Kirema. I'm glad. I'll take that as a compliment. Thank you very much. And I'm very excited that you find this content useful. So in that regard, it has been a wonderful moment, everyone. Since the beginning of the week, this is one of the most profitable weeks for us in the last couple of months in this community, as all the assets we took advantage of this week moved in a particular direction without consolidation or choppy situation, as we continue to add more position as price moved in that particular direction. So once again, congratulations to everyone. I'm so excited, and let's see if we can replicate the scenario again today. So I encourage us all to be patient, exercise patience, allow our structures to mature before we jump into any positions here. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today, and I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works here, and eventually be able to use the information you gather here to make your own independent trading decisions. And if you have found this content helpful and useful in making your independent trading decision, I would really appreciate your support by giving the video a thumbs up. This is the cheapest way you can support this project. Kindly give it a like, and your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and thank you for everyone who has been in great support of this channel, both live here and behind the scenes. Thank you very much, guys, and I look forward to seeing you same time tomorrow. Let me see what will happen. I'm leaving this environment today. My flight is coming in about 3 hours or 4 hours from now, and I'll be back to my station, and probably we might go back into the normal time of 8:05 a.m. UTC, 9:05 a.m. West African time. But if you like this time frame that we do, please let me know. We might shift it back to this time and continue from this time. Please let me know if you find this time conducive for our Forex Morning Mastery. Thank you very much, guys, and I look forward to seeing you same time tomorrow. I don't know if it's same time tomorrow yet, but I will let you know on both my Telegram platforms. Thank you very much, guys, and do have a wonderful day. Bye bye.